Hey guys, alrighty, big day here, lots to unpack with CPI here. So we got a, let's see, CPI year over year came in at 3.1%, which was just over forecast, but below previous of 3.4%. We got CPI month over month at 0.3%, which was over forecast and previous of 0.2%. We got core year over year at 3.9%, which was unchanged from previous and 0.2% higher than forecast. We also got core month over month at 0.4%, which was 0.1% higher than previous and forecast. This reading, in my opinion, caught the markets by surprise. So if you look at the analysts, so there's 10 of them, big banks and whatnot, that analyze this market. Everybody but Goldman Sachs got it wrong. And even Goldman, they only got core right. They got your CPI headline wrong also. So this actually was the reddest market open since October 2022. If you remember what happened on October 2022, we had a massive red open and markets rallied, and that was the bottom of the market and the bottom of the bear market. Now, am I saying this is the bottom of the bear market or bull market or whatever? Not really. I think we're at a really, really interesting spot in this market. This video, FYI, is going to be long. There is a lot to talk about, but I think it's worth talking about. So, the markets was pricing in going into 2024. Markets were pricing in almost 7 rate cuts. This came after the December FOMC meeting. Markets were pricing in at one point January rate cut. Then they were pricing in a March rate cut. As of right now, we are only pricing in about 5 rate cuts. And even that 5th one is very much so on the edge. We're likely to see that pull back and really only price in 4 rate cuts. Even more important, our first rate cut is not projected to happen. Sorry, you know what? I was looking at this wrong. We are only pricing in 4 rate cuts right now. I didn't realize they had 2025 on there. So yeah, so we are only pricing in 4 rate cuts right now. And not only that, our first rate cut is not projected to happen until June. Now, if you remember, Jay Powell said in December, what? We only see 75 basis points of rate cuts possible. So markets are finally potentially believing Jay Powell. They're coming around. They're coming back down out of that insane expectation. Now, one thing, and you can see by these arrows here that I really wanted to point out, is that we have had these major drops, we'll call them, and we could really even probably add in, and I should have probably added in, this 6th drop right here. It wasn't as big of a red day, which is why I didn't add it in, but it was certainly a bottom. So we have had so many of these drops over the last 3-4 months that this bull run has been going on since October. But every single time after that drop, we have gotten bought back up. On average, after a red day like this, we have seen markets rally 1.432% the next day. Almost, and you can see here on November 10th, let's see here on February 1st, we actually engulfed the previous candle. So there is a really good chance that tomorrow we are going to see a bounce. Now, I think once again, we have a really, really strong possibility that markets could sell off tomorrow though. So things to think about, and this is something that I learned the hard way, I feel like, in 2022, is that markets need, one, a reason to initially sell off. Today, that was the CPI news, the data, the higher than forecast, that basically says Jay Powell is not going to be cutting rates. 2, we need a reason to keep selling. This is the critical point that every single one of these days proved that we didn't have a reason to continue to sell. Now, again, we are in a historical 15, almost 16-week long rally on the markets to historical strength and gains. You need to convince people to sell, which they had a reason to sell today because of CPI and the rearranging of the rate cuts. But you now need to convince these people that they are not missing the next 20% run over 15 weeks. I'm not sure if we have enough to do that yet. One thing that I do find very interesting here, though, is that we did break through the massive bull channel that we've been in since October 19th. You can see, and we'll zoom in here now finally. I wanted to show that. It was only a wick. We came down, we took out 409.95 supply. So now we're really looking at a 482.83 to 501.29 kind of range here. So, you see we took out that support there. So now the question is here, can the bears drop this lower? I really don't think they can. If you look, we came down, we had a hard bounce off daily 20 EMA support. And if you watch the final hour of the day today, it was a massive rally, just big old pump. This doji candle reminds me a lot of January 17th, and I really do think we could get a reversal. We might even get a gap up overnight. That's how strongly I feel that this 20 EMA support is going to hold, and we can push up. And if you look, we held this support area I mentioned from the 2nd to the 6th here. So I will be interested to see if the bulls can retake the 8 EMA resistance at 495.8 or not. We are in an interesting spot that if we close under 490.2, then we could be targeting 482.83. Going over to ES here, same thing. I just wanted to show that you can see we broke through our support level here. So now, we're trying to figure out where do we land? Where is our actual next support? So same thing here, we came down, we took out 49.73 supply. One big thing that I'm seeing here is that first we bounced off daily 20 EMA support and we did not close under 49.60 demand. I would have liked to have seen a close under that level, and I would have felt more comfortable that we could see 48.71. However, look at this candle with this long wick here. We could see a double bottom pump up, and that would certainly put in a new demand, and then we're targeting 50.44 again. The bears desperately need to close under 49.40 tomorrow, and the bulls need to close back over 49.95. Going over to the Qs here, so a little different. We did come down and take out 428.24 supply. However, here in the Qs, we did not break through, our bull channel support. So very, very strong support levels still holding. Same thing, we held daily 20 EMA support. And again, this kind of doji candle reminds me of January 5th and the 17th here, where we could see a pretty sizable gap up tomorrow, or at least a recovery to the upside. If we break through 425 tomorrow and close under the 20 EMA support and break our bull channel support, realistically close under 423.7 demand, I would be looking for a more sustained sell-off. But as of right now, I just don't think that we're going to get that. Bulls do need to recover back over 430.6 though. So same thing here on NQ. We came down, we took out 17,701. If you remember, when we broke through here on the 7th, I was looking for that back test of that day. We just never got it. I was looking for 17,701 to be back tested. I felt like that was a very critical level, much like 49.60. And we finally came down, 49.74. We finally came down and back tested it. And as you can see here, after hours, because we got a little bit of a pump here this final hour, and then of course the hour after market closes, we are actually sitting right at 17,701. Bulls did not lose their bull channel support. We also held the daily 20 EMA support. So a double bottom right here to push back up is extremely possible for tomorrow. If 17,701 holds as support here, and we can double bottom and put a demand in right here to turn previous resistance into support, that would be incredibly bullish going forward, and I would expect a run back to the 18,000 area. Now again, if bears can take us under 20 EMA support around 17,564, then I do like some downside. Okay, a lot to talk about on the VIX today. Wild day here on the VIX. So now, when I wrote some of what I was writing my TA earlier, I was expecting a close around 29% on the VIX because that was our one day from low to high move. I have not seen the VIX move like that and I don't know how long. And if you look at historically speaking here, the last time the VIX had, this is closed, not just high to low, but the last time the VIX has moved 29% like that, and I thought we were going to close there, was on February 25th, 2021, when it closed at 35.38% up. Now, one thing I think that is interesting, and there's a lot to note here, and we're going to kind of zoom out to see a lot of stuff here, is that, if you use first off the January 29th high and the October 23rd high, this downtrend line has been broken. That's a big break of a downtrend. So there's a potential cup and handle that could take us up into the 21s that is forming here. Something else that I think is interesting is we came up, we took out 16.06 and 17.17. The VIX has moved up 42% in 3 days. I cannot tell you the last time something like that has happened. I guess it would be back here, probably. Yep, it looks like back here in the October. That was obviously, back before the low was put in. So two big things I'm watching. This kind of bull channel consolidation since November 15th right here, that resistance was broken through. Again, another interesting thing I think is that we had this kind of quad, and I'm going to try to zoom in here for you guys a little bit so you can see here. We had this quad supply area from 14.35 to 15.29. We broke through and closed over that. So we have not closed over that level since November 9th, but this is also the highest close on the VIX since November 2nd. So with the VIX being crushed end of day, that plays into what I was saying this morning. Markets don't have a reason to continue to sell. Now, by all means, we might just have some scared bears and some smart money that doesn't want to risk being the first one to short this market. And that might be why we saw the VIX kind of unwind massively here end of day. But this is a huge breakout in the VIX. And I think it's unwise to ignore that. And I really do think that this is something that we can absolutely watch going forward. And I really do think that if the VIX can hold its own here and continue to hold this 15.3 area here, then we might see a bigger breakout. We very well could see that breakout into the 2021 area here. So keep in mind, again, November 2nd was the high, last time the VIX closed that high. And let's see where SPY closed on that day. Cancel. November 2nd. Let's see here. So November 2nd, the SPY closed at 430.76. Now let's look at the dollar here. I think this is very important, a very, very impressive move up on the dollar and the 10-year. So this, first off, was a huge breakout, and we'll zoom in real quick and then zoom back out here. This was a huge breakout of our consolidation, and this bull flag broke out to the upside. We put in we have this new demand down here at 104.018, but we got through our double supply of 104.14 and 104.44. So next target is 105.055 and then 105.927 to 106.133. As you can see, this is the highest close since November 14th. So let's look at November 14th here. Look at that, 448.73 on SPY. Now, something else I really want to point out here is that this is the biggest move up in a short period of time on the dollar since August 30th to October 2nd. During that time period, SPY had fallen 5.35%. The only other time we had this large of a move was January 23rd to March 8th, 2023, and SPY dropped 9% during that time. Just for reference right now, if you look at SPY, we are only down 2.6% here. So very much so underperforming. Now, if we go look at the 10-year yield here, it's the same thing. we had a major breakout. This looks like a failed bear flag that actually broke out here. And now, you know, we're touching this 4.33% area from back here on November 30th. So same thing here. The 10-year since December 28th is up 14.24%. The only other time this has happened was back here on September 1st to October 3rd, 2023. And you know what the markets did? SPY dropped 7.22% during that time period. Before that, we had July 20th through August 21st. And SPY also dropped 5% during that time period. So what does that tell us? Well, it tells us that markets are not, again, correlated. We have one of the largest days in almost 3 years on the VIX. We have one of the largest moves up on the 10-year and the dollar, yet markets do not want to sell off. So the question again remains, what comes next? So again, I think there's a real opportunity for bears here. I think they can do it. I think they can take it lower. But at the end of the day, we'll just have to see if these bulls can bounce it off of supports or not. I honestly am really interested to see how overnight plays. I personally am favored towards the bullishness, but if we close under these 20 EMA supports tomorrow, then I might be on Team Bear finally.